So, what market should you start trading? This is a question with a lot of different opinions, and in this video, we're going to be talking about Forex, crypto, and futures. They're the three markets that I see traders trade the most nowadays, and so they just make sense to cover. What market you choose as a trader is not going to dictate your success. If you're not profitable trading Forex, you're not going to be profitable trading futures. So if you're watching this video because you haven't found success in trading Forex, don't expect that to change simply because you change markets. Now, let's talk about Forex, crypto, and futures. We'll talk about the pros and then we'll talk about the cons. Arguably the most famous of all markets, the Forex market. This is the go-to market for a lot of beginner traders. The reason for this is because the Forex market is the market with the lowest barrier to entry, which essentially means that it is the market that requires the least amount of capital. You can open up a Forex account and start trading it with $50 or even less. So that is one of the pros of the Forex market. The other pro is that it is open Monday through Friday. So unlike the futures market, which is only open 23 hours a day, the Forex market is open 24 hours a day, Monday through Friday. As you might be able to tell, this is quite a biased opinion. I'm not the biggest fan of Forex. I never have been. I never will be. The reason for that is very simple. You now have access to things like the crypto market and the futures market. So if you're still choosing Forex, I simply have nothing to tell you. But we'll get into that later. We're not at the cons yet. The crypto pros is 24/7 markets, which means the market is never closed. The crypto market isn't only open during the weekdays, it's also open during the weekends. It is a highly volatile market, which again is totally individual. Maybe you like volatility and maybe you don't. For a person like myself, I will consider that a pro because I like trading volatility. Much like Forex, crypto also has a very low barrier to entry. You do not need a lot of money in order to start trading crypto. Global markets, meaning you can access the crypto markets no matter where you're based in the world. Certain markets are simply unavailable to a lot of countries, but that isn't the problem when we talk about crypto. Not as influenced by macro, and what I mean by that is it is mostly driven through emotion and fundamentals and less about actual macroeconomics. That essentially means that you don't have to sit there and learn micro and macroeconomics, which again is very, very beneficial to a lot of people. When it comes to futures, there is zero spreads, meaning when you want to get filled at a certain price, you are going to get filled at that price. Super regulated. There is so many rules when it comes to the futures market, and basically every brokerage is regulated. A problem that we see in Forex, for example, is that people will trade with offshore brokerages, which 99% of the time will end up in disaster. Now, again, Forex is open 24 hours a day and futures is only open 23 hours a day, but the majority of people don't really need that extra hour anyway. So let's move into the cons because that is the fun part. So Forex, we have not regulated. Now, of course, there are regulated brokerages. However, in the Forex industry, it is typically a lot less regulated when compared to things like the futures market or the stock market. And so that is a genuine problem when you're trading Forex. However, if you are just using a regulated exchange or an exchange with good reviews, you're probably not going to run into any issues, but I wanted to put it out there as a con anyway. High spreads, okay? This is a genuine problem in Forex because it has very high spreads. Now, of course, if you're trading Euro USD or any other major asset, there is likely going to be a lot less spreads. However, for a day trader, this can still be a serious issue. If you are a person who scalps the 1 minute time frame, you might run into some issues, especially if you're used to the zero spreads that futures has to offer. Now again, if you are just sticking to the major pairs such as Euro USD, GBP USD, or GBP JPY, you are probably not going to have a very big issue with the spreads. But again, if you want to trade a minor pair, it can become a real problem, especially if you are a day trader or a scalper. Heavily influenced by macro, of course, meaning that interest rates, inflation rates, and all those macroeconomic things play a huge role when it comes to the Forex price action. Now again, if you're a day trader, this is not really any of your concern, but if you are a swing trader, well then it's almost a necessity that you understand micro and macro economics because that is exactly what shapes the Forex market. So again, there is not a lot of good stuff to say about Forex, unfortunately. Now remember, this is purely my own opinion. You can have a totally different view on the Forex market as a whole, and that's completely fine. I'm giving you my opinion. Let's talk about the cons of crypto. The first one being lack of regulation. Now, of course, that is the entire purpose of crypto, as it is decentralized finance. However, it can be a problem for a lot of new traders specifically. A lot of people are getting scammed in the crypto industry. Now, again, I'm not blaming crypto itself, I'm blaming the individual. Wild volatility. Now, just like I mentioned in the beginning of this video, this can either be a pro or a con depending on the person. To me, this is a complete pro. I love trading volatility as a day trader. However, there is simply people that prefer more flat markets or just less volatile markets. And so for those people, this would be considered a con. Exchange risk. Okay, now this doesn't mean that you're in any danger if you are just using major exchanges. Talking about exchanges, I am using toobit. Okay, the best exchange that I have yet to use. Their support team is great, their interface is simple and easy to use, and if you're trading on a budget or maybe you're just looking for free cash, I can offer you 50 USDT for free by simply signing up with the link below. So if you don't have an exchange yet or you're looking to change, check out toobit and then claim your free 50 USDT by signing up with the link below. However, we did see it before with the FTX as an example. There is a chance that they're simply out to get you. However, just like FTX, this is crypto and we have to keep that in mind. So there's no reason to go around in a constant panic. However, you should keep in mind that, again, this is not a very regulated industry. Now, the cons of futures, the first one is overnight margin risk. When you decide to hold a trade overnight and you are trading the futures market, you must keep in mind that the trade can spike in margin requirements overnight. And so that can be viewed as a con for some people, especially if they're not aware of it. But again, it simply means that if you hold trades overnight, they can spark in margin requirements. But this isn't a problem for day traders, of course. This is for swing traders and people that hold overnight. So people that like to scalp or day trade the futures market, which is very popular because of the zero spreads, they have absolutely nothing to worry about when it comes to the risk of overnight holds. Contract expiration, this is not the biggest problem in the world. It essentially just means that when you are trading a certain contract, it will run out and you have to switch it. Just to give you an example, this is the micro E-mini NASDAQ. And as you can see, we have the June contract, September, December, March, and June. So it essentially means that you have to switch your contracts at a certain date. If you forget to do it, the worst that can happen is that you trade a different contract than everybody else and you might be met with a lot less volatility. But again, not really a con to the majority of people. Remember to put it in your calendar and then you'll get a notification. So the next one, higher capital requirement. When you compare futures to crypto and Forex, there's a higher capital requirement. Now, the reason for that is because unlike Forex or crypto, when you are trading futures, you are trading contracts. There are two types of contracts. You can either trade the micro contracts or the mini contracts. Now, the mini contracts are quite expensive, and that's when you switch to the micro contracts. But the lowest amount of micro contracts that you can trade is 1. So unlike Forex, where you can trade 0.1 lot, in futures, the lowest you can trade is 1 micro. And if you can't afford that, well, then you simply can't trade. So again, it does not have a very high capital requirement, but it is a little bit higher than Forex and crypto. So that was essentially the pros and cons of the Forex, crypto, and futures market. Again, you can do and decide whatever you want. I am a big fan of the crypto and futures market. I've traded futures for the majority of my career. However, I've started to switch into crypto. The reason why I suddenly started enjoying crypto is because I noticed that the volatility is simply too good to not trade. I also have a lot more assets that I can monitor at the same time. So unlike futures where I primarily trade the NASDAQ and the S&P 500, in crypto, I am looking at a bunch of different assets. Now again, this can be a double-edged sword. For some people, it is very beneficial that there are fewer things to choose in between. But for an experienced trader like myself, I enjoy having multiple things to trade, and I found that the crypto market offers me exactly that. Now again, there are different types of futures contracts that I can trade. However, the only ones that I really like in terms of intraday price action is the E-mini NASDAQ and the E-mini S&P 500. However, in crypto, there's a lot more assets that I actually like trading. So that is why I am primarily trading crypto nowadays. Again, the majority of my career have been trading futures. I have also traded Forex for a good part of my career. Now again, Forex can be a good option for some people. However, in my case, I didn't like it. Now, if you're a swing trader, that is a completely different story. The reason why I don't really like Forex is because of the spreads. But again, I'm a day trader, I scalp, and so it's obvious that I don't like Forex. However, if you're swing trading, trading, I think that is a completely viable option. There's a question that I see over and over again, and that is, does this strategy work with this market? Let me be the first to tell you that unless you're trading some type of very specific yield farming, arbitrage, or contract roll strategy, any technical analysis can be applied to any market. So again, unless you're trading any of those very specific strategies, you don't have to worry whether your technical analysis can be applied to the crypto market if you come from Forex. Vice versa, if you come from crypto, you can also apply it to futures, or if you come from futures, you can also apply it to Forex. Just wanted to get that out the way. Regular technical analysis is not tied to a singular market. You can apply it to any market. Thank you a lot for watching. This was simply my pros and cons of the Forex, crypto, and futures market. I hope I helped you decide what market is for you. Let me know in the comment section if I did. And without further ado, I'll see you in my next video.